Welcome back to Investing Talk Podcast.
Great to be back.
Today, we are focusing on a massive pharmaceutical player that seems to be baffling the market a bit, Viatris.
Mm-hmm.
The core question we're tackling is simple, but the answer is, well, it's anything but. Is Viatris a good time to buy now?
That's the million-dollar question, isn't it?
Before we try to unpack this financial puzzle and, cut through some of the complexity here, please do hit that subscribe button.
Yeah, it definitely helps us out.
Give us a like and drop a comment below. Seriously, we want to know what company you want us to put under the microscope next. We read every single suggestion.
We really do. And Viatris is a classic case study for this kind of analysis. Because it presents this major contradiction. I mean, on one hand, you've got a globally dominant player, strong market positioning.
Right, a big name.
Exactly. But on the other hand, the recent financials, they show significant volatility, negative earnings even. So making a buy decision right now, it absolutely requires navigating that complexity. It's not straightforward.
Okay, let's unpack this then. Starting with, the fundamental challenge that makes every investor nervous, the income statement.
The top line.
Yeah. When you look at the recent filings, the first thing that really hits you is the revenue contraction. We saw a 5.70% decrease.
Which isn't small.
No, it's a significant headwind. And the 2023 Form 10-K confirms their performance is struggling across various segments. It's not just one area.
And that lack of revenue momentum translates directly into what we call the profit puzzle.
Explain that.
Well, we're looking at some seriously negative figures here. I mean, earnings per share, EPS, sits at negative $2.92.
Okay. Wow.
Yeah. And the return on equity, ROE, is a highly worrying negative 19.77%.
Okay, those numbers, just in isolation, they kind of scream value trap, don't they?
They absolutely do. On the surface, it looks pretty bad.
So I have to challenge that immediately then. Why would any major investor bother with a stock that has such, ugly profitability figures? What's the upside view?
Because you have to buy the future, right? Not necessarily the past performance.
Okay.
What's fascinating here is the potential for a margin turnaround. It's based on strategic initiatives, new product launches they're working on.
Oh, management action.
Right. Management is actively working to, re-engineer their cost structure. The analysts who are bullish, they are banking entirely on the success of that strategic pivot.
Towards higher margin products, presumably.
Exactly. Higher margin products rather than just relying on the historical results, which, as we said, aren't great.
That distinction is key. But, to execute that future strategy, the company needs financial muscle today.
Absolutely.
So if the income statement is a mess, the crucial question is, what is the financial bedrock supporting this massive company? Let's look at the balance sheet or maybe cash flow.
Cash flow. This is Viatris's sort of unique selling proposition, I think. Despite the JAP losses, the company generates significant free cash flow. We're talking around $4.85 billion.
$4.85 billion. That's substantial.
It is. That free cash flow, or FCF, that's the entire engine of the enterprise, basically. It's what pays for reinvestment, helps manage their balance sheet.
And accrues.
And crucially supports their shareholder returns, dividends, buybacks, that sort of thing.
And the market clearly recognizes the scale of this operation too, right? Given the substantial market capitalization, which is approximately $11.79 billion.
Yeah, it's a big company.
They might not be profitable on paper, like you said, but they are generating tangible, available cash flow.
Exactly. And that cash flow leads us directly to the primary lure for income investors.
The dividend.
The dividend. Let's talk about that.
Viatris offers a pretty compelling yield, about 4.76% right now.
Okay, 4.76%. That yield is high. I mean, borders on a danger signal when you compare it to negative EPS, doesn't it?
It does raise eyebrows. If a company has negative earnings, the traditional payout ratio is kind of meaningless. So how do we judge the sustainability of that dividend?
Right, and this is the ultimate nugget of knowledge for Viatris, I think. You have to monitor the FCF coverage ratio.
Okay, FCF coverage.
The dividend is not being paid by profits. It's being paid entirely from that robust $4.85 billion cash flow we just mentioned.
So the cash flow covers it for now.
Exactly. While the high FCF provides coverage right now, the high payout ratio, even when you measure it against FCF, raises real sustainability concerns.
Yeah. So it's something to watch.
Absolutely. It must be monitored. If that cash flow dips even a little, the dividend is immediately at risk. This is the core contradiction of the company. Profit bad, cash good, dividend high.
It's a balancing act. Okay, beyond the cash engine, The company does have a solid competitive foundation, right?
Yeah, definitely.
We're talking about a diverse portfolio. It mixes generic and specialty drugs, coupled with broad global reach in diverse therapeutic areas. They're not a one-trick pony.
No, and that diversity is their resilience factor.
Right.
They are positioned to leverage multiple trends simultaneously.
Like what?
Well, like the rapidly growing pharmaceutical demand in emerging economies, for instance,
Okay.
while also insulating themselves somewhat from the margin pressure that constantly plagues the pure-play generics market. It's tough out there for generics.
Right, that constant race to the bottom on price.
Precisely.
Okay, let's move to how the market is translating all this uncertainty. The stock price. It reflects extreme volatility, trading within a 52-week range of $6.85 to $13.55.
Huge range.
And it's currently trending near the lower end of that range.
Yeah, and that trading range is exactly what makes it interesting for some people.
How so?
While trading near the bottom suggests potential for a significant rebound if a major catalyst hits.
A bounce back.
Exactly. Technical analysts, the chart watchers, they've established key support levels around $9 to $10 that traders are watching very, very closely.
Okay, so technical support down there. What's fascinating here, though, is that despite the technical uncertainty and the negative earnings we keep talking about, the company has delivered some genuinely positive corporate developments recently. It's not all doom and gloom.
No, they absolutely have. Back in August 2025, they delivered their Q2 results.
Right.
And total revenues actually came in above expectations.
Oh, interesting.
Yeah, and that momentum allowed management to revise their 2025 financial guidance upward. That signals increasing confidence, in their turnaround plan.
Okay, so they're feeling better about the year. And strategically, are they moving away from that lower margin generics grind we mentioned?
It looks like it. Precisely. Look at the FDA approval for the first generic iron sucrose injection in the U.S. That's a strategic win for their complex generics portfolio, which usually has better margins.
Okay, complex generics.
But maybe more telling is the recent acquisition of Aculys Pharma.
Aculys. What's that?
That secures them exclusive regional rights for innovative specialty treatments like pitolisant and Spidia in Japan.
Ah, specialty treatments. Higher margins again.
Exactly. Those are explicit moves aimed at diversifying into higher margin specialty areas, away from the basic generic competition.
Those strategic pivots certainly make the recent analyst shift much clearer then.
Yeah.
While the average rating is still hold, a critical change occurred on October 15th. Truist Securities initiated coverage with a straight-up buy rating and an ambitious $15 price target.
$15. That's a powerful vote of confidence, isn't it?
It really is.
It suggests at least one major institution believes the strategic moves and that powerful FCF engine are starting to outweigh the historical profitability concerns.
But I have to ask, $15, that's above the 52-week high of $13.55.
Right.
Given the persistent negative EPS, why would an analyst believe Viatris can sustain a move into new price territory like that? What are they seeing?
They are essentially underwriting management's ability to deliver margin expansion, and probably quite quickly.
In the short term.
Yes, in the short term. The $15 target implies successful cost management and immediate revenue contribution from those new specialty assets, like the ones from Aculys.
Okay, so a lot hinges on execution.
A huge amount. And critically, you have to remember the consensus price target remains lower. It's at $11.17.
Still some upside, though.
Oh, yeah, which still indicates a potential upside of approximately, 11.89% from where we sit today. So even the average view sees some value.
Okay, that brings us to our final section then.
Yeah.
What are the critical catalysts and risks? What will truly move this stock one way or the other?
Right, the make or break stuff. The most immediate, absolutely critical event is the Q3 2025 earnings release.
When is that?
November 6th, so very soon. This report will either validate or, potentially destroy that recent bullish analyst upgrade from Truist.
High stakes.
Extremely high stakes. If Viatris shows continued positive revenue trends from Q2 and, crucially, any material sign of margin improvement.
That's the key.
That's the absolute key. Then the stock will likely move higher. If not,
Okay, so November 6th is circled on the calendar. What else should investors watch for in the short term?
Well, for income investors, we have the ex-dividend date coming up on November 22, 2025.
Right, need to own it before then to get the payout.
Exactly. And then in December, keep an eye on ETF and index rebalancing. That can always create short-term trading volatility, regardless of the company's actual operational performance, just flows of money.
Good point. Looking further out, longer term, what are the growth drivers? Where could Viatris be in, say, 3 to 5 years?
The biggest opportunities probably lie in capitalizing on market expansion, especially in those emerging economies we touched on earlier. There's huge growth potential there.
Untapped markets.
Yeah. And we should also watch for strategic partnerships or joint ventures. That could open up completely new therapeutic areas for them or rapidly expand their specialty drug distribution footprint.
Makes sense. Now, for the necessary balanced view, what are the major risks that could derail this whole turnaround story?
Okay, risk number one, and it's a big one, remains competitive pressure in the generics market globally.
Still a core part of their business.
Yes, and it's an inherently difficult low-margin business. If that strategic pivot into specialty drugs is slower than expected or less successful,
Then what?
then that persistent margin pressure will continue to strain the FCF engine we talked about. Remember, everything relies on that cash flow right now.
So execution risk again.
Absolutely. And we must also consider regulatory risks. They're constant in the pharmaceutical sector. Price controls, approval delays.
Always a factor.
Always. You absolutely need to consult the detailed risk factors section in their 10K filing before making any decisions. Do your homework.
Good advice. And finally, let's talk pure speculation. Are there any, rumors or structural factors that could drive the stock price outside of the fundamentals we've discussed?
Oh, absolutely. There's always chatter in the market.
Like,
Well, given the company's global footprint and that, $11.79 billion market cap,
yeah, right there.
M&A speculation is pretty strong. Viatris is viewed as a highly plausible, kind of digestible acquisition target for a larger pharmaceutical firm.
Who might want that scale?
Exactly. Someone seeking instant massive scale in generics and global distribution. It's a quick way to get big globally.
Interesting. Anything else on the speculative front?
Additionally, market buzz often centers on potential non-core asset sales.
Selling off pieces.
Yeah, divesting peripheral businesses to rapidly deleverage their balance sheet. That could unlock immediate cash value for shareholders separate from operations.
Okay, so lots of moving parts there too. Let's try to synthesize this entire discussion then. What is the overall investment thesis for Viatris? Boiling down.
I'd say the stock is a high-stakes play, really. It's built on that fundamental contradiction we started with.
Which is?
Excellent financial strength,
Yeah.
primarily backed by that massive $4.85 billion free cash flow, and a strong global market position,
Okay, the good side.
counterbalanced by poor recent profitability, negative earnings, and those intense competitive headwinds in generics.
So a mix of good and bad, basically.
A real mix.
Based on everything we've looked at, the overall assessment seems to lean towards opportunity, doesn't it?
Yeah.
Provided, and it's a big provided, that management executes the turnaround effectively.
It does lean that way, cautiously. Based on the strength of the FCF, the upcoming catalysts like earnings, and that recent bullish analyst upgrade,
Yeah.
the stock carries an overall bullish rating of 710. That's how I'd frame it.
A 7 out of 10, bullish.
Yeah, which makes it potentially attractive both for, say, the short-term trader who's playing those catalysts.
Like the earnings report.
Exactly. And maybe also for the longer-term investor who believes its competitive strength and sheer scale will eventually allow it to convert that strong FCF into consistent GAAP profits down the road.
So appealing to different types of investors, perhaps for different reasons.
Potentially, yes.
Okay, that provides a really clear perspective on what is admittedly a very complicated stock. Thank you for walking us through all that.
My pleasure. It was interesting to dig into, and maybe I'll leave you and the listeners with this final thought to mull over.
Okay.
The stock right now, it seems priced based on skepticism, reflecting those bad earnings numbers.
Right.
But that truest upgrade to $15, that's priced based on faith in the future, faith in the turnaround.
Okay, the core tension.
Exactly. So the question is, will the Q3 earnings results on November 6th provide the necessary evidence of margin improvement to actually validate that recent bullish call? Or will volatility and skepticism continue to dominate the narrative for Viatris? That earnings report really feels like the immediate moment of truth.
A great question to end on. Definitely something for investors to watch closely. Thank you again for joining us on Investing Talk Podcast.
Anytime.
We hope this analysis helps guide your investment thinking. Keep learning, keep questioning, and we'll see you next time.